we are going to be the most important software company in the world, and people will figure out what that's valued over a long period of time. And we're very comfortable with investors toying around. It could be like this, it could be like that. We are going to deliver the world's best software with the world's most efficient way of delivering it. And I think you'll find in a number of years that there will be a consensus. Palantir is a truly special software company that is arguably the most important software company in the world.
What's going on, guys? Welcome back to another video. And in today's video, we're going to be talking about ticker symbol PLTR, and that is Palantir. And they recently IPO'd in September, and also their stock price recently has started to shoot up again. And it's drawing a lot of attention, and I just wanted to give my thoughts a bit about the company and if I am personally buying or see a bright future for them. But before we get into it, if you don't mind just dropping a like and hitting subscribe, it really helps out the channel. Check out the links in the description for my free Discord server that anyone can join, and also my referral link to Webull, where when you sign up and deposit $100, you can get 3 free stocks. Now let's get into it. So what does Palantir do? Palantir is an American software company that specializes in big data analytics. They're headquartered in Denver, Colorado, and they were founded by Peter Thiel, Nathaniel Gettings, Joe Lunsdale, Stephen Cohen, and Alex Carp back in 2003. The core reason Palantir has been both secretive and controversial since its founding in 2003 is because it began with money from the CIA to develop data crunching software for the government. So in a nutshell, Palantir does data science, management, and analytics in big data. They started off working with government agencies, like I mentioned, while recently expanding to non-governing entities. As a technology, this is invaluable to both organizations and private and public companies, and most every organization collects data. So Palantir essentially wants to interconnect all the data sources that were collected by an organization and use big data analytics, machine learning, and algorithms to help drive decisions. Now, by using machine learning and algorithms, they can link together this data to almost perfect accuracy levels. I've seen comments that this is a bit of a controversial business, mainly on the invasion of privacy, and people have criticized the company before for that. But in my personal opinion, this is going to happen whether we like it or not, and we deal with this already with Facebook, Apple, Google. Just based on your search history, and even when you're talking around your phone, it kind of picks up on what you're talking about. And you might see ads for it later that day. So it is kind of trippy, but I wouldn't personally worry about this because it's going to happen to us no matter what. Palantir has faced criticism from privacy right groups and even its own employees because of the work they do with the US government. Now, the company has helped US agencies carry out controversial data collection and surveillance policies, and it's even doubled down on the pursuit of this government work. Palantir Technology CEO Alex Carp told investors that the company is holding fast to its strategy of helping government agencies like the US Defense Department digest and analyze data. Even though these associations have stirred up controversy in the past, Palantir is going to go into untapped markets that isn't doing this with their data already. So we're not talking about Apple and Google, but more the medium and smaller sized corporations that aren't doing this. And they can also tap into government agencies, state, county, and local to continue to grow and expand their services. So just a brief description of Peter Thiel and Alex Carp. So Peter Thiel is an entrepreneur and investor. He co-founded PayPal, led it as CEO, and then eventually took it public. He made the first outside investment in Facebook, where he also serves as director. He co-funded Palantir Technologies, where he serves as a chairman, and has provided funding for LinkedIn, Yelp, and dozens of other startups. He also sits on the board of Facebook. Alex Carp, who joined as CEO in 2004 for Palantir Technologies, is known as an unusual and eccentric leader, even by Silicon Valley standards. He pursued a PhD in philosophy before joining the startup and is recognized by his wild hair and brightly colored athletic attire. I also wanted to add that I have noticed that ARK Invest has been buying Palantir, which for me is a very bullish sign. Although they buy into a lot of disruptive companies, this personally looks good in my eyes. Not saying that this is 100% proof that this will be a successful company, but I really like that they're buying into it. It gives me some confidence, and I just wanted to mention it and let you guys know. So how do they make money? Palantir makes money by selling data analysis and software to governments and private companies. Revenue is roughly equal between the government and commercial customers. And so far this year, more than 95% of Palantir's revenue came from existing customers. A large part of their revenue has come from a relatively small number of customers. The top three together accounted for 28% of its revenue last year, the company said in their filing. The average revenue per customer is around 5.6 million, and Palantir grew their sales 49% during the first half of 2020 to 481 million, suggesting an annual revenue run rate of 962 million this year. It grew revenue 25% to 743 million in 2019, but still lost 580 million and has yet to return annual profit since it was founded in 2003. So, onto the growth opportunity. The head of the business development, Kevin Kawasaki, said that with smaller companies, Palantir will be able to provide useful products, and the company is focused on forging ties with the largest 6,000 global businesses. Since Palantir only recently began hiring sales staff, they make up just 3% of its 2,400 employees. So there is a lot of room to grow, he said. So about Palantir products, Palantir Gotham is a software platform for government operatives in the defense and intelligence sectors, which enables users to identify patterns hidden deep within datasets, ranging from signals, intelligence sources, to reports from confidential informants, as well as facilitates the handoff between analysts and operational users. This helps operators plan and execute real-world responses to threats that have been identified within the platform. Palantir Foundry is a platform that transforms the ways organizations operate by creating a central operating system for their data and allows individual users to integrate and analyze the data they need in one place. Lastly, Palantir Apollo is the continuous delivery software that powers their SaaS platforms, Foundry and Gotham. This puts it in a public cloud and beyond. Apollo works around the clock to put their latest features in the hands of their customers. It eliminates the trade-off between stability and speed by delivering continuous automated updates without disrupting operations. So as you guys know, the stock has actually been trending upwards the last week or so, and I found this article basically with some main points about why the stock is up. So there was some news earlier last week that the United Kingdom reportedly was in talks with Palantir about using the company's software to help with the struggling test and trace of the Rona program. But that hardly seems like the type of thing that would cause a flood of interest days later. It also appears a lot of the move higher is based on momentum ahead of the company's November 12th earnings release. More than 72 million shares have traded as of 2 p.m. Eastern on last Friday, and that's well above the 42 million share average, which was their daily volume since it's been public. So they hope to generate $1 billion in sales this year, but after Friday's jump, it now trades at more than 21 times that sales figure, which is a little bit concerning and something to definitely note. And I also wanted to add that after 17 years, they're still not a profitable company. And that is mentioned in this interview, and I will throw that clip up right here. But this is very common with these growth companies, but it's something that needs to be known.
So walk us through what the path to profitability looks like.
Well, we build these products years before people build them, and that takes money. And what you see in the COVID pandemic crisis is we had built this way of going to market with Foundry, which would allow us to literally supply an enterprise with a completely new stack of products within 6 hours and maintain them. And what you saw when we did that is we grew the company 49%. 49% off of a 743 base. And the divergence between expenses and growth is dramatic, and we're just going to be very, very focused on invigorating our software offering. But when you're growing 49% off of a 740 base, I think that's a pretty strong indication of what the future could hold.
So I did find some price targets from some analysts, and we have Morgan Stanley's price target at about $13. Market beat consensus price is about $11.33, and then Goldman Sachs is around $10. So you can see, I guess kind of the medium range would be like $11.50. My personal opinion is that it will trade anywhere from $10 to $18 for a while. It could touch 18 if it really starts to hype up and just catches a wave of momentum and FOMO. But I wouldn't expect this thing to really shoot up like crazy in the next few weeks or months, this would be a longer term hold. Okay, on to my closing thoughts. Now, Palantir has been around for quite some time now, and I'll continue to watch them closely. They do have earnings coming up on 11/12, and I'm very curious to get some more insight on the company. This will be their first earnings report as a publicly traded company and will likely give us some more insight on their strategy to grow and their plan for the future. Now, as a new company, there's always going to be doubt and controversy. You're going to have your bulls and your bears. This is the time where you really need to look deeply into a company and where you personally see them going, because getting into something early definitely takes a lot of faith and patience, and you can't just buy into something like this and expect it to jump to $20 or $50 in 1 to 2 months. This is something you should buy. If you buy it, lock it away and don't look at everyday fluctuations of the price. Just come back to it down the road and see what's up. Now, looking at their chart, every time they go up, they seem to have a bit of a pullback, and that'll be interesting to see if there's a pullback after this run-up that they recently had and what the stock will do around earnings. Now, we see that their chart typically reflects a pullback. However, this is gaining more attention now, and I'm seeing more and more YouTube videos on it. I'm seeing people talk about it more. So it's just, getting a lot more hype now. Also, another thing to note is that for some reason, people don't really like stocks under $15. They prefer to buy them after they've already ran up a crazy amount, like something like NEO. NEO was a stock that's been under $20 for quite some time, and now that it's $40, now everyone wants to buy it. So that's what I'm saying. If you can get in something early that you really like and you're patient, it will pay off in the longer run. So hopping over to StockTwits, sometimes I like to come on here just to get the overall feeling of a stock and see other people's views on it. Definitely make your own views when it comes to stocks. Don't just take what people, random people on the internet are saying. But let's read some comments we have. So this one says institutions will buy heavily. Gold mine. Let's see. In the last month, Palantir has been trading in the 9 to 14 range, which is quite wide. There will be a lot of bag holders this week. Watch. It did have a pretty big run up, but it all depends. If you're gonna lock this up for a couple years, you could probably buy whenever you want at these prices. Let's see. Monday morning may be very difficult to get this stock at a bargain price. I agree with that. It's already ran up quite a bit, so maybe if it did pull back, that's when you buy. Maybe you just watch it for now. See how their earnings are. This will be like the first time we get their earnings, so it might be smart to wait until, Thursday or Friday to maybe open a position with them. Okay, so in conclusion, I tried not to make this video too long. Sorry that it ran a bit longer than I expected, but they do have government contracts, and I think they could really grow into something huge in the years to come, potentially one of the biggest data companies there is. They are trying to go where no data cloud company has gone before, and I actually do really like the CEO, and he does claim that they will deliver the world's best software in the most efficient way. I'm excited to see where this goes, to be honest. I don't have a position yet, but I will definitely consider it. I would buy shares in my lockup and do not touch account and just let it grow for years. And also, looking at the 2022 or 2023 leaps seem like an attractive deal as well. They're really not that expensive, and it's kind of a cool way to leverage your money. But keep in mind, it is risky. Options can expire worthless, so probably buying the shares is the better bet for the conservative investor. That's pretty much my thoughts on this, guys. Let me know what you think about this stock in the comments below. Are you interested in it? Would you buy, or are you not that interested in this one? Please like and subscribe, and have a good one.
Getting money, I just went up in my stock. Up in traffic, never lacking in a drop.